author of A Gift to My Children. Jim, thanks for coming along. All right, let's talk about this. I mean, so surely Saudi Arabia can make up any shortfall from Libyan supplies.
No, they cannot. Saudi Arabia's been lying about their reserves for decades. Saudi Arabia, the last two times, said we're going to increase production, and they couldn't increase production. They told George Bush they couldn't increase production, and they cannot. Don't fall for that. The reason oil is going up is the world is running out of known reserves of oil.
Okay, so that $100 a barrel now, we were 75 only about 6 months ago. Do we go up to and breach that 148 record that we had?
Eventually we will, yes, there's no question. I mean, I don't know what's going to happen in the Middle East. If it all blows up tomorrow afternoon, it'll go there next week. But if it doesn't, if it calms down, oil will go back down for a while. But the world is running out of known reserves of oil. These are simple facts.
Jim, you've got a new fund that you're launching. I mean, how does oil fit in that? And do you buy the companies or do you buy the physical stuff?
Well, this is for stocks because many people don't want to buy commodities themselves. So these are the commodity stocks, the prominent companies in the natural resource area.
The Shells and the BPs of this world.
Yeah, you know who the big names are, and then this is all in agriculture, mining, alternate energy. These are the big companies, and for people who don't want to own commodities themselves for whatever reason, this is an alternative.
But Jim, I mean, we've had such a run-up with these companies. I mean, there's so much, even higher prices than this have actually factored in.
In bull markets, things go to prices which nobody can conceive of. Even me, I'm the bull. I'm telling you, at one point I'm going to sell out, and then they're going to double again. In the bull market in stocks, who would have thought that Cisco would have gone up 100 times? It did. That's what happens at the end of a bull market, and that's what's going to happen at the end of the bull market in commodities. It's still several years away.
Okay, I mean, we were talking a couple of years ago. You were talking about $2,000 for an ounce of gold. We're not there even now. You were predicting that in 18 months.
No, I wasn't saying. No, I said it's going to happen in a decade. No, you should go back and check your Bloomberg.
I will do.
Check your Bloomberg. Yeah. I said in the decade. Gold will go to 2,000 in this decade. That's pretty simple as far as I'm concerned.
Okay, what about silver? I mean, this is
silver will certainly go over 50. Yeah. The old high on silver was 50. Silver will go to new highs again. All these prices are going to go to absurd levels by the end of the decade, by the end of the bull market.
And of course, as Asia gets richer, of course, soft commodities, agricultural goods, that sort of thing, there's kind of a lot of pressure on those, and that's another thing that you're buying into.
It
is this universal, isn't it?
Huge bull market in agriculture. Agricultural prices are still extremely depressed on a historic basis. The price of sugar has gone up 600% in the last 6 years, 5 years. It is still 50% below its all-time high. 50% below its all-time high. The scope for price increases in agriculture is staggering.
Jim, is there anything that you will stay away from when it comes to commodities?
Not that I can think of, no.
Hello, everyone. Welcome to Global Government News. Today is Monday, February 28th, 2011. I'm Darko. Welcome, everyone, to this Global Government News Bulletin. Please visit my website, www.ggnonline.com. That's ggnonline.com. Here's the poll up here. What are the chances of the U.S. government actually shutting down next month? And so far, the majority is 29%. Will never happen. And actually, it's also tied right now, 29% very likely. So it's either very likely or will never happen. And I'll cover some news on that issue as we move forward here. All right, we're going to keep moving here. Wall Street ends up. Oil muddies bullish picture. And bullish comments from Warren Buffett helped U.S. stocks end another good month on a high note on Monday, but uncertainty about oil prices could keep investors from pushing the market much higher than the dollar. The dollar, there we go over here. Dollar slips ahead of Bernanke testimony. The U.S. dollar slipped to a 3.5-month low against major currencies on Monday and may extend losses on speculation. Federal Reserve Chairman Ben Bernanke will continue to support stimulative policy. In other words, going to continue printing money. And then we have this next one up here, and it's titled The End of the U.S. Dollar. You can come and check this out. The turmoil across North Africa and Middle East is threatening not only to overthrow aging dictatorships, autocracies, and monarchies, but also to upset the geopolitical balance between the countries of that region and the Western powers that existed since the 1950s. For the West, the issue has always been the security of oil. For the U.S., there is a second issue, and that is the security of Israel. Now both are under threat. So it says some 56% of the world's oil reserves are in the Middle East, with another 9% in Africa. Therefore, unrest in the region could be a catalyst that sets off a global monetary oil shock. And you can go and check this out. Some pretty good information in there. Links will be posted for all these articles in the video's description. It says here, IMF says weaker dollar would help global growth. That's from the 22nd. And also 22nd, Soros plans new Bretton Woods conference, talking about a new world reserve currency. Then we have dollar higher after mixed U.S. data. The dollar opened slightly higher today following a battery of mixed U.S. data overnight. And then we have the euro. Euro stays ahead of dollar and maintained the upper hand versus the dollar. And it says, though it slipped back from the 3-week highs as investors took a more cautious stance on the single currency. It says U.S. GDP seen at 2.8% pace in late 2010. It says the U.S. economic recovery had less momentum than previously thought, the latest government suggests. And Citigroup, U.S. to fall to third largest economy. Rising oil prices pose new threat to U.S. economy. Oil edges lower as traders eye Libya turmoil. Then OPEC weekly oil prices surge by $7 per barrel. Moving on to Press TV, it says Iran oil prices surpass $100. Libya's oil chief production down 50%. Libya's oil chief says production is down 50% because of the exodus of foreign oil workers fleeing the country's violent uprising against Gaddafi. And from what I read, Libya basically supplies mostly Europe. They only supply the world's, only like less than 1% of the world's oil supply, but they supply up to 80% of Europe's. So, and then we have U.S. can ride out Libyan oil supply disruption with reserves, Obama says. Saudi raises oil output as Libyan exports disrupted. And we just watching that first video on basically, that Saudi Arabia doesn't even have the oil. And it says here, gold flat, Libya unrest prompts safe haven bids. Gold was little changed near 1410 an ounce on Monday, but notched its biggest monthly gain since August as chaos in Libya and rising tensions across the Middle East prompted investors to buy the metal as a safe haven. Longest bond slump since 2008 marks recovery as junk surges. Bond market investors are showing the greatest confidence in global economic growth since credit markets crashed 3 years ago. Then we have commodities. You can go in here and check this out. Here's the actual graph from last March until almost this year, and you can see the increase. And it says here, gas oil futures were up $3.70. And then as far as the other big increases were cocoa up $56. And then we have coffee up $3.90, corn up $9, and then cotton up $7, wheat up $13. Copper was up $4. Copper's been on fire. Gold right now is at $1,411 per ounce. It was up $2, and then silver was up 89 cents, and it's now at $33 per ounce. So we have hedge funds slashing food price bets after a harrowing fall. It says hedge funds are leading an exodus from agricultural markets, slashing bullish bets in the U.S. from almost the highest levels on record after grain prices slumped, money managers said. And this is a pretty big deal, I guess, because a lot of the food is the actual prices aren't really based off supply and demand. A lot of it is based off of these hedge funds and that in food prices, these big investors, and what they think the price is going to be. U.S. consumer spending cools as food, fuel costs climb. Consumer spending cooled more than forecast in January as rising food and fuel prices caused Americans to cut back on post-holiday visits to malls and restaurants. And we have groceries to carry the cost of the carbon tax, warn supermarkets. That's right, Australia is going to be passing a national carbon tax if Gilliard gets her way. Said food prices are set to rise under the federal government's carbon tax, with some of the nation's largest food retailers expected to be hit with potential carbon bills of millions of dollars a year. A national survey of 500 food and grocery retailers also revealed 83% intend to pass on the cost of the carbon price and higher prices onto the consumer, reports the Daily Telegraph. So we're going to move on here. Consumer prices rise in February, says survey. This is from the News.au out of Australia. Inflation up 0.2%, says a survey, and it says flood-driven food price increases, and it says consumer prices have risen again this month, but at a slower pace than previous month, driven by increases in the price of food. A private survey has found. And we have the price of food is at the heart of this wave of revolutions, and I don't know if that's completely true, but we're going to move on here. It says inflation prompts subsidy spree as prices for food and energy climb. Growing number of emerging market governments, mostly recently in Asia, are expanding subsidies, imposing price controls. That sounds really productive, doesn't it? Or embracing other short-term fixes to protect consumers that many economists fear will prove counterproductive and lead to higher inflation in the end, which they will because they've done in the past. Says China battling against inflation. When mentioning the rise of food prices over the past 6 months, 55-year-old retiree in West China's seemed quite upset. The cost of food rose over 30% in 6 months, while income barely increased. And Best Buy to close all retail stores in China. Why? Because the Chinese can't afford it. And they look for cheaper and more localized domestic brands. It says here, Best Buy, the world's largest consumer electronics retailer, announced its plan to close all 9 retail stores in China and its headquarters in Shanghai and lay off about 1,000 workers. And it says here they're going to get a good severance package. And when you move down here, it says that a China Economic Times report said that the service is a luxury in China. Most Chinese consumers are bargain hunters who would not spend a little more money in Best Buy because of its professionally trained sales personnel. They would rather go to domestic retailers such as Gome or Sunning in order to save a few dollars. And it says here, Beijing to slow growth. Official target lowered in bid to fight inflation, lessen dependence on exports. Now we have global credit warfare. China preparing for a treasury bond sell-off. And they've already started since the end of last year, selling off their U.S. Treasury bonds that they're holding. China may soon call time on Western quantitative easing. More worrying, the language she is using is far from friendly, said in a report issued last month. The Daegong global credit rating company praises, quote, emerging creditor countries for preventing the collapse of debtor economies. In other words, that's us and China during the recent crisis, but stresses the, quote, vulnerable position of America, whose, quote, excess issuance of dollars has triggered a global credit war that rouses all the countries in the world to take various credit resources as a financial weapon to safeguard the national interests. So, and they blame quantitative easing for increasing exports of capital and raising international commodity prices, causing price and asset inflation in developing countries, where, according to the cited World Bank estimates, net capital flows to stock markets soared by 42% and to bond markets by 32%. And we'll move on. Businesses in the U.S. expand at fastest pace in 2 decades. Businesses in the U.S. unexpectedly grew in February at the fastest pace in 2 decades, indicating manufacturing remains at the forefront of the recovery. Well, yeah, we need manufacturing. I don't know if we're going to get it, but if we do, like I said, I believe it's going to be after we have, what's going on. No unions, no benefits. We can't retire until to get a pension until we're like 70, 80 years old. We'll work harder, longer, for less, and that's when the manufacturing will come back. Obama's top advisor on job creation has presided over a company that shed jobs. That's right. And that's talking about Jeffrey Immelt, Chief Executive Officer of General Electric, Chairman of the Jobs Council last month, and the GE faced hefty fines from the Securities and Exchange Commission in 2009 and 2010. And then you go to the chart here, and you look at here, and 161,000 employees in the U.S., and you move down here, and that was in 2005, and in 2009, in 4 years, 134,000. So almost 30,000 jobs lost. The daily bail chart shock. The real unemployment rate is 22%, and you can go there and check that out. It remains above 22% with February update. Details from John Williams, Shadow Government Statistics. And we have this article from the Wall Street Journal reporting only 1 in 4 got mortgage relief. Republicans now want to kill HAMP program that made only a small dent. Move down here, it says just 1 in 4 of the 2.7 million homeowners who sought to participate in the Obama administration's signature mortgage assistance program has succeeded in getting their monthly payments reduced. The rest failed to qualify for the program or were disqualified after they were initially accepted into the program. Yeah, that was a very shady program. A lot of people got left out in the cold. Obama urges compromise on budget. U.S. President Barry Soetoro has called on congressional representatives to temporarily reach a budget agreement to prevent further political deadlocks. Then we have Spain retirement age raised to 67. Nearly a quarter of all people living in Spain will be over the state retirement age within 20 years. And it says here the aging population is largely due to a fall in the birth rate. So what happened to population growth, huh? Experts believe, and it's also going on in Germany, it says experts believe that the current socioeconomic climate makes it difficult for couples to have more than one child, and that's called, what? Economic warfare. So you don't have a child, and it's called eugenics. Providence School Board votes to fire all of its teachers. says the Providence School Board voted last night to fire all of the city's 1,900 public school teachers from the Providence Journal reports. More than 700 outraged teachers packed into the school board meeting to protest the decision. Then we have this. Public sector workers could see their gold-plated pensions halved. Public sector workers could see their gold-plated pensions slashed to make it easier to transfer services to private firms and charities. So, and this is going to be the era of privatization. Thank you.